Good afternoon, and thanks to everyone for making the time to attend this webinar. We know this is an important topic to so many in our region, and that a huge number of people and companies will be impacted by the current trade and tariff situation. My name is Wendy Stark, and I'm the Director of Business Retention and Expansion at Invest Windsor-Essex, the lead economic development agency for the Windsor-Essex region. We're pleased to host this webinar in collaboration with the Windsor-Essex Regional Chamber of Commerce. As many of you know, the Chamber and Invest Windsor-Essex are co-chairing the Windsor-Essex Economic Trade Task Force, which was established on February 3rd and is comprised of community leaders and business associations and serves as a unified voice for economic development and trade in the Windsor-Essex region. This task force works to collect, coordinate, and disseminate information on strategies, programs, and other remedies to alleviate the impact these trade barriers and tariffs will have on the well-being of workers, entrepreneurs, and businesses in the Windsor-Essex regional economy. Please check out wetarifftaskforce.com for more information. I want to let you know we are recording the webinar this morning, so I want to clearly state that the information shared is to the best of our knowledge at this point in time, but that the situation is so fluid that anyone watching the recording at a later date should really check to see if the information is still valid or not. Before we begin, I would like to acknowledge that the land on which Windsor and Essex County are located is the traditional territory of the Three Fires Confederacy of First Nations, comprised of the Ojibwe, the Odawa, and the Potawatomi peoples. We specifically recognize the Caldwell First Nation and other First Nations, which have provided significant historical and contemporary contributions to this region. We also value the contributions of all original peoples of Turtle Island who have been living and working on this land from time immemorial. Now I would like to pass things over to my colleague, Sabrina DeMarco, who will say a few words and introduce our speaker.
Thank you, Wendy. Good afternoon, everyone. Thank you all for joining us for this important conversation on navigating U.S. trade in Windsor-Essex. I'm Sabrina DeMarco, Executive Director of the Windsor-Essex Small Business and Entrepreneurship Center. At the Entrepreneurship Center, we work closely with entrepreneurs and small businesses across the region to help businesses start, grow, and succeed, whether here at home or in international markets. As we know, trade with the U.S. is a critical part of our region's economy. However, shifting tariffs, trade policies, and economic conditions can create uncertainty for businesses, particularly small and medium-sized enterprises. Working together as a team and with our partners, we are actively monitoring these developments and working to catalog the latest information on new trade policies, tariff updates, and government programs that businesses can accept or access for support. Our goal is to ensure that small businesses have the tools, resources, and strategies they need to navigate these challenging times effectively. We encourage you to stay connected with us, follow us on social media, sign up for our updates, and reach out to our team so we can help you stay informed and supported. With that, I am delighted to introduce today's speaker, Ray Fischer. Ray Fischer is a Senior Manager in KPMG Canada's Trade and Customs team, specializing in customs manufacturing and agribusiness, advising businesses on customs processes, risk mitigation, and regulatory compliance. Ray is an active member of the Canada Border Services Agency, Border Commercial Consultative Committee, and the CARM Working Group, where he contributes to discussions on trade facilitation and regulatory developments. He holds a CDSA Customs Professional License, P-Log designation, and is a chartered member of the Institute of Logistics and Transportation. Before I hand it over to Ray, just a quick note. If you have questions during the presentation, please enter them in the Q&A tab. We will go through them at the end of this session. Now, please join me in welcoming Ray Fischer. Over to you.
Thanks, Wendy and Sabrina. It's good to be with you all. I wish it was under different circumstances, but my 35 plus years in trade and customs, always in the Windsor-Essex region. I'm proud to say that. And I'm also proud of this region, of what it does for trade and the dependence on the businesses that we have and the different sectors that we have here. I was prior to KPMG, I was with FCA, Fiat Chrysler Automobiles, for 17 years, managed their customs department. And there's one thing that I'll just start this presentation off is I was listening to the news coming into work yesterday, and they were saying it was a 5-year anniversary of when the COVID pandemic was announced. And we all, it's hard to believe it was 5 years ago. And I think everybody takes some things from that and the impact that it had. But there was one word that I thought of thinking back to there that I had never really heard of in the terminology as it relates to the news, but the word fluid. Well, it is fluid. It is fluid in this landscape right now, and it's so fluid that I had to panic and get an updated slide to Wendy just before this presentation because of the announcements that happened today from the Canadian government. I just really feel that this is an important topic for businesses to understand, and it's hard to navigate. What I'm going to do, I have to mention that I'm trade and customs practitioner. There's some slides in here that will deal with some pretty complicated tax um, possibilities that you can put your comments in the chat, but when I get to those slides, I'll cover those off. So I'm going to go through this. Again, if you have any questions, please just put them in the chat and I'll do my best to answer them at the end. So these are the potential tariff measures. I'm not going to go through this line by line, but you need to understand that when we're dealing with the U.S., there's two different sets of measures that they are implying these tariffs to. There's the IEEPA, which is the Emergency Powers Act that you'll hear the U.S. administration talk about. And then there's the Section 232, which is the steel and aluminum. So those are the two distinguishing factors, and that's why we have two sets of tariffs that the U.S. is looking at. And then you'll hear, I'm sure that if you've been watching the news or seeing the news flashes, the people down below are names that are very familiar and have been in the news, and these are all the U.S. People that are making a lot of these decisions, but at the end, it's the U.S. administration. These are referred to as Trump tariffs, but it's really the U.S. administration. So I'm going to talk about steel and aluminum because that's the one that's front and center right now. So the talk of it was that the International Emergency Economic Powers Act enacted the original 25%, and that's the one on 10% on Canadian energy. There were changes based on some pushback from the Canadian government, and the U.S. administration changed it. And I just saw one mistake in here is I'm really trying to make reference to the free trade agreement that we have with the U.S. and Mexico as the CUSMA agreement. So as you see the USMCA, I should have put in the CUSMA agreement. It's the same thing. But what they did is the U.S. administration said, again, from pushback from Canada, that any goods that qualify for USMCA, the CUSMA agreement, are exempt till April 4th. We don't know what's going to happen come April 4th, but right now, if you have goods that are being imported into the U.S. and they are CUSMA qualified, and I need to say a lot of discussion that I'm having with people now is that they say, well, their goods are qualified. And then we asked to take a look at their customs paperwork that they declared to the government, and the paperwork is incorrect. It's not properly declaring qualification under CUSMA. Therefore, the surtaxes will apply, and there's no recourse to get a refund on those. The other thing that is different from the last go around on these in 18 and 19, the US has pulled drawback off the table. People that are familiar with drawback, they'll know what I when I mention that. What drawback is if you have goods that are entering the US, they get further manufactured, they come back to Canada, this area in particular, uh, you can you can get drawback on those goods for regular duties, but the surtaxes you cannot get, and that's something that the U.S. Administration put in. To the opposite effect is that because this area is so integrated cross-border supply chains, industries that we're doing, we've all seen the news saying that in the automotive industry or in this region in particular, parts could cross the border up to 7 to 9 times. That's reality. And that's something that the government hasn't taken into consideration. A lot of questions are coming around. Well, while I'm bringing in goods, I'm not I'm not importing the goods. They are my customer in the US. It's their material. I'm just working on it. Why do I have to pay the surtaxes on those goods? Um, that's a loaded question, and it's not there's not an easy answer, and I can't really get into that today. But if you're going through those questions, all I ask is that you reach out to your advisors. Could be accountants, lawyers, your customs broker. A lot of times will be able to answer that. So those are the things that you need to really understand and look at to make sure that you don't make any assumptions that you're doing things right, because it's what we find is as human beings and as businesses, we take things for granted because it's crossing the border, and it's been the same way for the last 15 years. And you need to really understand that there could be some pitfalls if you don't look at that. And then the next one, and I didn't change. This is the one that's got a lot of press over the last couple of days, and I had to change the slide from 25 because of the U.S. administration's announcement that they were bumping it to 50% because of the stance that the Doug Ford made on the electricity. And then also that I just left that 50% in there. Uh, and then hot off the press, and this is the um, announcement that came out late this morning, and it's the federal government will impose 25% tariffs on U.S. goods worth 29.8 billion in retaliation for the 25% tariffs on steel and aluminum the U.S. administration imposed today. That takes effect tomorrow, so 12 o'clock, 12:01 this morning, Thursday. These tariffs, these extra tariffs will be hit. So whenever Canada's a little different on certain things, whereas the U.S. administration speaks to the actual commodities, Canada has tariff lists that they have for their list two that will be taking effect in the not too distant future. The What they're saying is that the tariffs on the 30 billion in imports is on steel and aluminum, but it also includes products including computers, sports equipment, and cast iron goods. Canada is very methodical on what they put the tariffs on. Another big one that we were talking just before this presentation is on bourbon, Kentucky bourbon. And I think if you've seen some of the headlines or the news articles, that has a huge impact on that area. Canada was very, like I say, very strategic on the last go around with these, and they really targeted states that they thought would have the biggest impact on the administration, and they're taking the same approach. So that's really what has happened as of today. as of 12:15 today. Can't say that there might not be any changes later today. And that's really why it's important that you stay apprised of what these changes are and how they will impact your business. These are just quick slides. So March 5th, the exemption for automotive manufacturers and the parts required to make new cars. So these goods must qualify for the CUSMA agreement. Again, apologize for not changing the USMCA to CUSMA. It's the same agreement. So that is in effect as of right now. March 6th, so the U.S. has waived tariffs on goods from Mexico and Canada that qualify for CUSMA until April 2nd. So that waiver is still on. We don't know if it's going to get extended past the April 2nd deadline, but I have to pause on this slide for a second. So the goods from Mexico and Canada that qualify, a lot of people realize that they went through this exercise and then before CUSMA was NAFTA, and they say, well, my goods qualify. They're from Canada. I have inputs from Canada or the US. But if you do not declare them properly on your import paperwork with either US CBP or Canada CBSA, then they don't qualify. The goods are free, but based on the declaration that you've made, the goods don't qualify. So it's really important that you go back and take a look at your import paperwork to make sure that it's completed properly and declared properly to the different customs administration, CBP in the US and CBSA in Canada. March 11th. This is the latest one this week where he adds another 25% to the tariff on Canadian steel and aluminum, and that took effect March 12th. The U.S. imports more steel and aluminum from Canada than any other country. So this was a significant blow, and this was in direct relation to the tariffs that Doug Ford imposed on the electricity they supply. So very quickly, what happened was they they removed that extra 25%, and then since then Canada imposed the other 25% on those selected goods, including aluminum and steel from the US. Reciprocal tariffs. Again, these are, you hear that word reciprocal. So it's going to be tit for tat. That if you do this, I'm going to do that. And there's really not much known at this point other than you're seeing the posturing by both administrations in the US and Canada. There's an immediate focus on the EU, Japan, South Korea, China. But Canada will also be impacted. And this slide was printed a while ago, and we can tell you that, yeah, Canada has, instead of has been impacted by this. And again, the commentary that's coming from, Donald Trump, that was whatever countries charge the United States of America, we're going to charge them. I can say that the U.S. administration's understanding of there's a lot of talk about GST, like our GST, VAT taxes, digital service taxes that the U.S. considers those tariffs, and they just don't really understand the validity of what GST digital services are. And again, it's just really my final comment on this is just be aware of what all this is and how it could impact you. And again, it's really impacting you on your cross-border trade, goods going in and out of the U.S. mentioned earlier that Canada has two lists. They have the initial one, which was 30 billion. I could have probably added another one in here, but again, a lot of things that are on list two have been moved up to that will take effect tomorrow. But again, this is where they were really strategic. If you take a look at those lists, like orange juice, Florida is the state, bathtubs, sinks, toilets, and related items. Floor coverings down in the south. You've got Kentucky bourbon, carpeting, plant and laboratory equipment. So there's approximately 1,256 items that are on this first tranche of tariffs that are in place. Then the next one is 125 billion, and this is again, um, this is big because it's the passenger vehicles, trucks, steel and aluminum, which can basically come off of this list and get put into that middle bucket that just will take effect as of tomorrow. Certain fruits and vegetables, aerospace products, again, another area which is big in this region. Beef, pork, and dairy. We've heard a lot of rhetoric and a lot of commentary around pork and dairy and beef and trucks and buses, recreational vehicles. The full list was released March 4th. It is available. There's 4,400 items that will hit on that. And one of the things, I don't know if you can see it on the slide, there's a link there. It talks about country of origin for purposes of marking. This is under the CUSMA countries. That's very important because a lot of discussion that I'm having right now is how do I know if my goods are Canadian, a product of Canada, they're made in Canada, and what do I declare on my paperwork so I don't get subject to the tariffs? That's really important to understand, and this is where you would need to just really lean into your advisors to just really understand what is the country of origin and how do you properly declare that on your paperwork, on your declarations into the U.S. This slide is important, and it's important because it's busy, and busy in the sense of these are Canada's free trade agreements. We have 15 free trade agreements totaling 51 countries, 1.5 billion consumers, and 60% of the world's GDP. What we've heard very loud and clear from the Canada standpoint is that they're looking at the supply chain right now and um, can we get products from anywhere else other than um, the US? So all these free trade agreements are a benefit to Canada. And it's things that we can look at, um, for supply chains for goods that we have or that we need, and that these countries can produce and provide to us. So it's important to note that too, is that I mean we're very fortunate with the number of free trade agreements that we have, and Canada has negotiated for us. I'm going to get into like a little technical piece of this, and I need to again caveat this. These are concepts. The next few slides are going into some of the strategies that we've been in discussion with a lot of companies. And again, we're unique in this area is that there's a lot of companies that might have a U.S. affiliate, distributor. They could have a dormant company in the U.S. and stealing a line from Meghan Trainor's famous song, "It's only about the bass." And that's really what we are concentrating on and having conversations with is what we really want to try to do is we can't avoid the tariffs. The tariffs are there, but what are the tariffs being charged on? And it's really on the declared value. to customs. It doesn't matter which side is that there's valuation rules that are in place for companies to abide by. And again, just going back to earlier comments is that because like this region is unique, it is so unique. It's integrated with the U.S. and supply chains and goods, and as like it's almost habitual. We just do the same thing over and over again to get the goods into the States. Something is done, they come back, we do something and we send it back, or just it goes. We do something in this region and it's sent over to our and supply and customer in the U.S. So this is to the common way is you've got a Canco, they sell their product to a Canadian customer or they will sell it to a U.S. customer. So that's the typical thing that happens each and every day. Those numbers, the U.S. tariff of 25 million is really just based on the 25% of the 100 million. So that's really what the U.S. is would be paid. These numbers aren't substantiated. These numbers are just shown for presentation purposes. But I think everybody has been doing these analysis on their supply chain, and what that bottom number is because it's impactful. I want to start. I want to add something to is so back in the last time that we were around here, around with these issues. We knew the tariffs were coming. It didn't really get much attention. It definitely didn't get the attention in the press that it's getting this time. And then customers realized the impact after the tariffs were in place, and they were scrambling to try to figure out how can I get any of these tariffs that are being paid? Like I just use like the goods that are crossing into Canada and I pay these surtaxes, but then I use those goods in manufacturing of something else and I send it back to the US. So a lot of work was done on the drawback side, so getting those duties back. The What's happening now is the conversation started earlier, and the conversation started at the very top of the food chain within businesses. So C-suites are contacting us for some information. Those are the ones that are really doing the analysis along with all the other people within the company, just to really find out what is the exposure going to be, and how can we try to mitigate or again lower the base of what the surtaxes are being paid on. So this is a lot of you will probably have heard or understand the term transfer pricing. So it's again between two related entities. There's transfer pricing that again you look at this area. So you have Canadian customers, you have U.S. customers, but what you do in here is that you introduce a U.S. sub. So we've just titled this as a distributor. So there's certain costs, and again, I'm caveat this. I'm not an accountant. I'm not a tax professional, but I'm just talking about the concept here. So you have a U.S. distributor. You can sell to the U.S. distributor at a lower cost. The U.S. customer still pays the same amount of money. And then the last caveat on this slide. The lower the transfer price, the lower the customs valuation, which means it's the lower tariff that you would pay. There are income tax implications with this diagram. And that's really where the discussion has to be had with your other professionals, your tax professionals, and also some like lawyers if you're setting up this distributor. But this is a concept that that will work, not in every instance, but it does work. But again, it takes something it's not easy. And again, there are some definite implications you need to be cognizant of. Um, Again, potential transfer pricing options. So again, you can establish a U.S. distributor or contract manufacturer. You can fine tune your existing transfer pricing policies and ensure all intercompany services are paid separately. Change payment and delivery terms. And payment and delivery terms, what we're finding too is that if you're selling to your customer, and again, you're selling it into the US and there might not be duty on the goods going into the US, and you just declare your selling price to your customer. One of the first questions that we ask is, well, what costs are included in that selling price? There's a lot of costs that could be removed from that are not dutiable. Transportation is one big one. Brokerage fees, so customs brokerage fees, a lot of companies will put those into the final selling price. Those can be stripped out of your declared value. Again, another opportunity to lower the base. Use transfer pricing structures that rely on the U.S. Customs first sale rule. This is complicated, but when I say it's complicated, it is also a very um, um, solid rule that is backed by legislation, so U.S. legislation, and it really talks about that distributor by putting a distributor or another related entity in the fold, and then the sale from a Canadian company to that related entity becomes the value for customs. And it is lower than what it would be direct to customer. Your customer doesn't pay anything more. But again, the first sale rule is definitely an idea that for the right scenarios should be pursued. But again, that's you really need to get your other advisors involved in that. It's not a simple process. Joint transfer pricing and customs advanced pricing agreements, APAs. Again, another area that can be looked at. These are getting into some pretty complicated scenarios in the accounting world, and just again, you need to make sure that the proper advisors are involved in any of these discussions. The first sale requirement, I'm just going to talk about this because this is really a customs, U.S. customs piece. So the bona fide sale, so circumstances and documentation demonstrate that there's an exchange of goods for consideration between a seller and buyer. It has to be clearly destined for export. So the goods have to be somehow either through PO saying destined for export. It can't be commingled with Canadian goods. That's very important. There has to be an arm's length price. So importer must substantiate that the manufacturer's prices to a related middleman are at arm's length, meaning sales to unrelated parties are assumed to be arm's length. So transaction value. So this is an important valuation concept that needs to be adhered to for proper valuation. And then full documentation and record keeping. So the importer must present to U.S. Customs and make available upon request all documentation that supports the above requirements. The last thing that I'm going to say, because this is the last slide, and then we can get into some questions. The one thing that highly recommend is that if you are working with a U.S. customs broker and they're making declarations, and if you as the Canadian company or the importer of record into the U.S. And you're trying to mitigate these tariffs, there's a concept or process in place in the U.S. with CBP, and it's called reconciliation. Reconciliation is you just mark your import entry with your U.S. broker does this, and they just mark it as reconciliation, and that tells CBP that, you know what, at this declaration, this is our best estimate that this is the proper value that we're declaring. But it gives you 21 months without penalties, punitive or otherwise, with U.S. CBP to correct your value. So if you're going through a concept and you think you might, you aren't too sure if the declared value is accurate, definitely talk to your U.S. customs broker and just have them mark their entries as reconciliation. And I think that is that is the end of my presentation. I'll turn it back to you, Wendy, and
Awesome. Okay. Thanks very much, Ray. It's a lot of information to process. I'm sure there are a lot of questions related to individual situations. We're going to address as many questions as we can in the time we have allowed, but we are a large group. So if we don't get to all of your questions, we'll compile a list of additional questions and find the answers to those for you and send them out to all of the attendees. So let's see. So I'll just pose these in the order that they were received. Going back to the first slide, there was a reference to two different acts. And so why was that the case? And if you can explain a little bit more about that.
yeah, so IEPA is an Emergency Powers Act, so it doesn't need it doesn't need to go through Congress to get it approved. So it gives basically the full power of the president to enter into those. If you read any of the latest press from yesterday when Donald Trump imposed the additional 25% on steel and aluminum, he mentioned the emergency powers, and it gives them the power to do whatever they need to do because it could negatively impact the U.S. itself. So, and then Section 232 is actually it's passed. 232 was way back in the last go around, so there were those 232 tariffs. So those are two totally separate tariffs that are imposed, and just two sets of not regulations, and then just powers of the doesn't have to go through Congress, and the IEPA is the president has a lot of power with those.
Okay, thank you. So the next one is a question about whether the tariff on steel is applicable just to raw steel or if it's also on steel products. I'm assuming the same would be this. It would be the same for aluminum, I guess. Same answer.
Yeah, and it goes by the tariff classification, so the HTS code. And again, it's on steel goods like the aluminum and steel. So raw steel, steel tube, anything in those chapters within the customs tariff on both sides. So the U.S. and Canada use the same tariff up to the 6-digit level. So again, it would be on those products. The automotive components, there's a lot of steel and aluminum parts. There's a lot of steel and aluminum parts that companies in this area manufacture. So those aren't covered by the steel and aluminum.
Okay. So the next one, I'm going to paraphrase, I think, a little bit if I understand correctly. So it's a little bit of a question around materials going back and forth across the border. So if a company were to buy steel to build a die cast mold, the steel is purchased from Japan or the US. If it's coming into Canada from the US, I'm assuming it'll be taxed. If the product gets shipped back to the US for a process like coating and then returns to Canada for finishing and then shipped to the customers in the US, is that taxed every time it passes across the border, or is there a way to just factor out the value add in each step?
This is probably what I spent a whole lot of time on. It's complicated. I can't give a definitive answer because every situation is different. But the situation, the U.S. Like customs in the U.S., they have a program called Section 98 or U.S. goods returned, and that's what we're looking at. And each case is different, and it all depends on what is being done to, say, a block of steel or a block of aluminum that comes in. It's processed. We have to understand that there's a lot of scrap. Has it taken on something different? Talking about the HS codes. So a block of steel or a block of aluminum will come in classified as that when it goes back into the US? It's not classified as an aluminum block, it's classified as a semi-finished product. And we're in heavy negotiations right now with the US just to see what areas, because this is a huge area for this industry, because the initial block and the cost of that block is extremely um, expensive, and it forms a whole big part of it. And so again, this is something that if it's in your supply chain and you have questions, that's really where you need to just reach out to your advisors to have them work through that with you. So yeah, not a not a definitive answer on that,
Yeah,
unfortunately.
I think a lot of this is a case by case
Yeah.
situation, right? Yeah. Okay. So a question about the transfer payments slide. So if a customer or a company in Windsor area was to sell direct to the US customer, they pay I assuming the US customer would pay the duties, but if they do the sale to the intermediary, to the US distributor, who pays in that case?
So again, it's whoever is the importer of record. It's all driven by importer of record. So if you're selling to your customers and you're selling, um, uh, like I don't want to get into technical terms, but if you're selling to your customer and you say to your customer, "I'll take care of all charges. I'll take care of transportation, customs, and everything. I'll deliver it to your door," then you would become the importer of record. So the importer of record is the one that is going to be paying the surtaxes, these additional taxes. What you do with that is if you're going to pass those on to your customers, then you can pass those on to your customers. You want to make sure that if that is the case and that's how your supply chain is built, is that if you're including that 25% in your declared value, you need to back it out, because what's going to happen, and we found this and unfortunately in too many cases, is that's the case where you're selling to your customer, everything is included. You change something in your system saying, okay, I'm selling it for $100, but my customer's got to pay $25, like the 25% tariff. So we now change it to 125, and that 125 gets declared to US Customs. You're going to get charged 25% on the 125 if you don't have your paperwork set properly. So it's really just tied to who the importer of record is, and who has the relationship with the customs broker that's going to clear those goods.
Okay. So another question about transforming materials. So if company builds machines, um, among other products, steel and aluminum are in the frames of the equipment of the machines, the guarding, the structures. Will they be charged the tariff for the metal in the new format if they send a machine to the US? I think the answer is yes to that, right?
Yeah, yeah.
Yeah.
And again, it goes to like substantial transformation. And again, that one slide I mentioned to you about tariff classification. So as steel comes in, it's imported into Canada at this classification. It gets transformed. It's a new classification. You need to also look at the CUSMA rules of origin to understand if it's considered a product of Canada or is it a product of somebody like something else. So again, not an easy answer on that. Would
Okay, so another company, they are purchasing some manufacturing equipment from the US. If they need spare parts, replacement parts for the equipment, should they expect to pay the 25% upon delivery of the parts into Canada?
into Canada. So again, Canada has those lists that I mentioned. So we have the original, the first list that has a list of products. And I can send you the links, Wendy, that you can send out to everybody if you want,
Right.
that has the list, because it is pretty comprehensive of what those lists are. And again, with regards to the machinery, what is done, what's the classification that's being declared in the marking. So you have to look at that.
Okay. And trying to see if I understand this question correctly. So you're declaring, oops, questions jump around a little bit. Declaring into the US on a commercial invoice, can that value be declared as the company's cost instead of how much they're selling it to the customer or to the US partner for?
Okay, so can you read that again?
So declaring into the US on a commercial invoice, can the product be declared as their cost, the Canadian company's cost, instead of how much they're selling it to the US
No,
customer?
no, no.
Okay. This one is not really a question, more like a notation here, regarding transfer pricing, just for people to check with legal counsel as U.S. administration is ramping up their border investigation and fraud activities. So I think you've mentioned in the past in meetings we've had to just be very careful about how you price things. You don't want to undervalue it.
Correct. And yeah, U.S. administration that they're obviously know what some of the strategies that companies are looking at, valuation, um, audits. That's why putting reconciliation on your entries is not a get out of jail free card, so to speak, but it's definitely a way that says, you know what, this is what I'm declaring. I need to look at it, and then you go back and reconcile if you need to. But great point. You just need to make sure you have your other advisors involved.
Right. Okay, this is a different question. If a company ships finished product so a Canadian company ships a finished product to the US based wholly owned subsidiary, and then in the future they need to bring it back to Canada because it wasn't sold or, for whatever reason, will they have to pay tariffs on that, or would it be tariff free?
As long as nothing was done to it, it came back in the same conditions. So the way I understand it, it's just basically Canadian goods returned.
Mhm.
So it's a Canadian good. So yeah, tariffs. The way that they're structured right now, no, there wouldn't be.
Okay. And this one I'm not sure. Do you have any advice on, or can you advise a company on Section 98?
Um, there is possibilities that like on Section 98 and substantial transformation, there is a lot of advisors are getting into that because that's a big piece about, especially in this area, on substantial transformation. So, yes, our advisors can definitely work in that space, and those advisors are lawyers, accountants, customs brokers, trade consultants that definitely should be involved.
Someone had asked also for your contact information. I will share that when I share the presentation slides and the
Hmm.
link to the recording. I will share Ray's
Yeah.
contact information also. So somebody would like to confirm that steel imports into Canada will now be subject to 25% Canadian tariffs. Is there a drawback if the steel is re-exported back to the US? Is that the later list though?
Yeah, so steel and aluminum, yeah, the later list. So just there is drawback. Canada will allow for drawback, but I'm glad somebody posed that question because one thing Canada also has in the list one that came out, you have the ability to reach out to finance. Department of Finance in Canada, they issued remission orders for certain sectors last time around, and they're going to be doing the same thing. So again, there's consultation periods. If you're in a space where remission could possibly work, that just avoids you having to pay the duty and get it back through remission. The other program that is, we saw a lot of uptake in this on the last go around is what's referred to as duty deferral and EOPS, which is the exporter of processing services. EOPS is specifically on GST. So it remits GST at import. And then the duty deferral program basically says is that you are a manufacturer, you have inputs that come in, you manufacture those goods, and then they get exported. So under the duty deferral, you might have like 80% is exported, 20% is domestic. CBSA would still look at those potential offerings. That's where we have an advantage, is that Canadian companies can do that. And again, in this region, it's really uh, beneficial to look at those items.
Right.
Because the duty drawback is you pay the money out, you have to wait and file for a duty drawback. It could take up to a year to get your money back.
So, and I think I recall last time there was an opportunity for companies or industries to say, in certain cases, and this is kind of, I think what you're talking about is if they're unable to get a certain item, if it's like whatever grade of steel or whatever specific component they have to purchase, they are unable to get it in Canada. Would that be the circumstances?
Correct. Yeah. And that's really what finance looks at, is that, again, just not putting any undue harm on Canadian manufacturers.
Okay. Okay, so if a machine is coming back into Canada from the US for warranty work, so it was originally built in Canada, sent to the US for some warranty, no, it was built in Canada, sent to the US, comes back into Canada for warranty work from the original PO, what would be the declared value going back into Canada? Or going back into
Yep.
the US rather, sorry.
So it's under warranty. So again, paperwork documentation would need to, show that your original PO says you've got whatever, a 1-year warranty, 90-day warranty. It's within those terms. And then this is another area that the U.S. hasn't been definitive on. Will you have to pay? Because the surtaxes, there is no cost for that warranty. It's basically included. You've already paid the surtaxes. So the argument is that there wouldn't be any other value declared that the surtaxes would have been paid. Again, that's where you would have to, like, each circumstance is different, and you would need to, validate, the exact circumstances before a definitive answer.
If a company has a purchase order for a tool build with definitive values, is it still beneficial to ship at a lower value under reconciliation?
No. No.
That's a nice short answer.
Mhm.
In what ways could data analysis or other automation, IT capabilities help us be better equipped to manage, address, thrive with all of the changes that are going on?
I don't know if this directly answers the question, but the first thing is I would take a look at any SOPs or work-related instructions you have for preparation of paperwork, cross-border paperwork, to make sure, see if it's dated, to make sure that you're declaring the proper pricing, understand and take a look at any contracts you have for transportation, making sure that those are updated, and you're removing any transportation costs from.
Oh, there we go. You froze for a minute. Okay, great.
Sorry. Yeah.
No worries. Okay. I think, was that kind of the end for that
Yeah,
question?
just like on the paperwork. Yeah, looking at that. Yeah.
Yeah.
And again, if I'm not getting the answers to these questions, just put them back in the chat and I'll just get.
Absolutely. And we can, anyone can feel free to email us afterwards. If something wasn't sufficiently answered, we'll get the answer for you. So have two different questions that are basically kind of the same. Is there a contact for the Department of Finance for the remission or duty deferral? If you have one or if someone has
Yeah.
one, we send that out.
Yeah, I have one. It'll be in the list one, like the customs notice that came out, and there's a link that you can go right in there. So I'll send that to you, Wendy.
Okay, so there's two folks that had that question, more or less. So we'll get that contact information for you. Okay, this is kind of a specific one. If a company ships the finished product to the US, ships finished products to the US based wholly owned subsidiary under CUSMA before April 2nd and sold after April 2nd to a US customer, would the tariff be applicable? PO will be released to the Canadian company by the US customer after April 2nd.
I'm gonna have to defer that question because April 2nd, there could be a whole lot changes, and I just have to be careful not to Yeah, it's definitely you just really need to understand the timelines, what it I
Oh, there we
apologize. I
go.
don't know if that's me or
Yep.
sorry.
I don't
Yeah.
know. That's okay. That's okay. We're going to wrap up in a couple of minutes anyway, so I don't think we'll get to everything. But yeah, this was, I think, your answer to this question about the PO being released after April 2nd, because a lot of the thing is we don't even know what's going to happen really on April 2nd. Is it really going to be April 2nd or is it going to be delayed, right?
Yeah, that's right.
Yeah. Yeah. Okay. Let's see. Try and get to just a couple more with the steel supplier. I'm assuming it's the US steel supplier, not clear on this. Would the steel supplier be able to apply for tariff remission or duty drawback and not pass along the increase? So I'm assuming that's if
Yeah,
somebody's importing it.
so they duty drawback. There's like some US if they're the importer of record, there's three people that can apply for drawback. The original import I'm assuming it's coming into Canada. So um the importer, so whoever the importer of record is, sometimes it is the steel supplier. The exporter, or it could be an intermediary in between that receives it. It gets more complicated as you go through those different scenarios, but yes, you can apply.
Okay. This is just a bit of information that somebody wanted to share that was given to him by their own customs broker. This is regarding goods repaired in Canada and returned to the US. So this is not really a question for Ray necessarily, but just an information sharing. And this was what was said to them. As the goods were repaired in Canada, you'll need to show the original value, the original country of origin, the country of manufacture, the value of the repair, and note that the goods were repaired and slash processed in Canada on the customs invoices. The repair processing this is HTS
HS
for
code.
repairs.
Yeah.
Yeah, for repairs processing done in Canada, returning to the US, done pursuant to a warranty. So there's some detailed information here. Customs invoice. Yeah, anyway, so it's on customs invoice, please show the 9802 number first with the original value. On the second line, show chapter 197 number with the value of the repair processing.
Yeah.
So it's only the 25% tariffs will only be assessed on the value of the repairs done in Canada. That was from
Yeah.
customs broker.
Yeah.
Yeah. Okay. Can a product, a mold or die, be sent under TIB into the US? How long does the company have to return to Canada? How many times can this process be completed?
Yeah, if it's going in on a temporary TIB is a temporary import bond, and there's regulations of how those goods can go in on a TIB. So a TIB is just waiving the duty and waiving the actual declaration of those goods. So yes, goods can go in on a TIB. Depending on the nature of the back and forth and what happens, TIBs are used a lot, but also the Chapter 98 in the US is used also. So those are specifics, and you'd have to look at the dynamics and the actual movement. Uh,
Okay. So I have three questions here that are very, very similar. So I'm hoping you can sort of answer them all at once. It's around whether design costs or consulting value can be removed from the final cost of the product.
I'm going to have to defer that. That gets into some technical areas
Mhm.
within that, and just what's one person's definition of design costs or consulting costs. That's something that you would definitely want to involve. Obviously, yourselves, the meaning the company, and possibly accountant, but definitely trade specialist. So
Okay.
either an accounting firm, customs broker, or consultant.
Okay. Okay. Yeah. So I think so. Three people had a very similar question there.
Yeah.
And we only have two more here. So I'm going to try and we're a little bit past time, but we only have two more questions. So maybe we can get to them and hopefully they're easy or easy-ish. Okay. As an EOPS company, we receive our US customers' castings, we machine them, send them back to the US customer. Are these shipments applicable would the 25% tariff apply to these shipments?
Yeah.
Yeah.
Yeah, and again, under EOPS, again, that's for the GST duty deferral. Like if they're coming into Canada, I would probably make a safe assumption that there's probably no duty on those goods right now. But duty deferral or duty drawback is available to the Canadian company. And then anything that happens to that item that it goes back, it potentially is exposed for the duties into the U.S.
This, I think I know the answer to this one, but there's an attendee that is purchasing art for a client from a US company. I'm assuming that the art is, or the client is Canadian. Is the tariff applied to the cost of the item plus the exchange when it's coming into to Canada?
So customs is a little different than, us just going over there and we buy something for 100 US and it costs 150.
Mhm.
That's scary to say, but what it is whatever the sale price was, is that if you, and then the exchange is charged on the US value if you declare it as such. And I can tell you that CBSA's exchange rate is a little lower than, because they go by the Bank of Canada rate, whereas the bank's is a little higher, but it is always on the declared value and it's really on the purchase price. So if you buy something art, and I know it's not $100, but it's probably some other zeros, but if that's what you pay and you put it on your credit card and it's US, that's what you would declare, and then they would do the declaration as such.
This is a different question, is there any kind of Canadian relief program for the agricultural sector, knowing that we have such a large sector in Windsor-Essex, Chatham-Kent, Sarnia-Lambton?
On the ag sector for goods coming into Canada, again, you would have to look at the list to see which items could be impacted. With the ag sector is the supply chain is pretty integrated. So you might have growers in Mexico that sell directly to Canada. You need to make sure those goods go in bond through the US so they don't attract US tariffs. But I can tell you is we don't have any definitive response from the U.S. administration. Is if in bond movements, there is some discussion that in bond movements will not remove the necessity of surtaxes in the U.S. Huge problem, along with, and I'll just throw this in. Not sure that this audience would be aware of it, but de minimis, which is a U.S. program where any goods valued at under $800. This is really high level. It's not all the regs on this. Anything under $800, you don't have to do a formal entry, and there's no duty on that. Trump wanted to remove the de minimis, but it plugged up the ports of entry significantly and put CBP under a huge administrative crunch. So that's still, you can still use de minimis, but I can tell you, just like in bond movements through the US, they're looking at that. And then so if the goods go in bond from say Mexico into Canada right now, they hit Canada. Um, there's no issue. If you bring in ag products from the US, again, you have to look at the lists and there could be surtaxes on those.
Okay. And last question. So we won't, because we're past time, we won't take any more questions now, but please feel free to email me. And I'll get an answer for you. But last question, isn't the TIB the same as a drawback?
No. TIB is a temporary import bond. So that's U.S. terminology. In Canada, we call them E29Bs. It's a temporary import into Canada, whereas duty drawback is the payment of duty, and then goods are, in this case, exported, and you can use the regulations to get the duty back.
Okay, great. Okay, so that's all we have. We've gone a little bit past time, but there's just so much to digest with all of this, and hopefully everybody's received the answers that they were looking for and received some information that can help them manage the situation, which of course changes by the day. Again, we will be sharing this raised slides and the recording and the various contacts, the list of the tariff items, as much information as we have, and we'll get that all to you as soon as possible. It won't be today, but hopefully tomorrow we'll get that to you. And like I say, please feel free to reach out. If anybody has any additional questions, if we can help support you in any way, we do have this tariff task force, as I mentioned. So a lot of that is information gathering and just determining what the impact is on the region and doing what we can to support and send this information to higher levels of government. So please feel free to reach out. We also have a manufacturing subcommittee that we could probably use a couple more people on that as well. If you want to reach out to me, and I'll be happy to link you up with that. So thanks again for everyone for attending, and we look forward to supporting you as we go forward. And I'm sure there'll be changes again tomorrow. So have a good rest of your day. Thanks very much, Ray.
Thanks.